I'm Gaëlle ARENSON. I head Africa Business Plus, which is a daily premium economic information service, part of the Jeune Afrique Media Group, the organizer of this beautiful event. So today we'll be talking about how we can better mobilize institutional investors to foster development of infrastructure, to foster to help fund the energy transition through capital markets. So the statement, my statement today is the following. African sovereign wealth funds, pension funds, and insurance companies have over $1 trillion in assets invested in government bonds and foreign assets. Yet, we see that Africa capital markets suffer from a lack of annual funding. There's actually an annual funding shortfall of $107 billion to finance the continent's development and energy transition. And why is there this gap? Because the nascent institutional investors scene is confronted to several obstacles, and these include regulatory restrictions, lack of quality investable assets, currency instability, expertise gaps, and of course, the liquidity deficit. So far we see that local institutional investors have been reluctant to tap into local capital markets. So these are the questions, the big questions we're going to be looking at today, and explore the mechanisms, hopefully, which will help us improve that situation. So I'm now going to call the panelists, the participants of this panel. I'm going to call them to the stage. First, we have the immense pleasure of welcoming Dave UDUANU. Please, Mr. UDUANU, come to the stage. Mr. UDUANU is the CEO of Access Pensions, which is the 4th largest pension fund of Nigeria. So please welcome Mr. UDUANU. We also have the immense pleasure of welcoming today with us Denis KOUASSI. Mr. KOUASSI heads the IPS CNPS, which is the Caisse Nationale de Prévoyance Sociale of Ivory Coast. It's Ivory Coast's leading public pension fund, and which covers the private sector and independent workers. Also with us today, Nathalie LOUAT. She heads at IFC Trade, Finance and Supply Chains. Please give a warm welcome to Nathalie. Also with us today, Mr. Walter da Cruz PACHECO. He is the president of the executive committee of BODIVA, which is the Angolan Securities Exchange. Thank you. Okay, finally, but not least, we have two representatives of UMOA. We have the Badanam PATOKI. He's the president of the regulatory authority of the capital markets in UMOA. Please give him a warm welcome. And we have also Oulimata NDIAYE. She's the head of UMOA-TITRES, which is the market for government securities in West Africa Monetary Union. Please give her a warm welcome. So without further ado now, I'm going to introduce the 3 key points we'll be addressing today at this panel. So the first key point we'll be looking at today is there indeed a genuine opportunity, or is it rather excessive enthusiasm that we are facing? How significant indeed is the funding potential of local institutional investors in Africa? So that's going to be my first point. My second key point is we're going to be looking at risk allocations and regulations, and how, to a certain extent, they're adapted to intra-African investments. That's my second key point. And then my last key point is we're going to explore new mechanisms to foster capital markets in Africa. structured finance, pool capital, blended finance, what innovative mechanisms can indeed entice local capital markets? Okay. So without further ado, we're going to be starting with our first key point. And okay, so I'm going to switch to French with those panelists that prefer speaking in French. And then I'll go back to English with the English-speaking panelists. Alors, première question, Monsieur KOUASSI.
First question, Mr. KOUASSI. CNPS for Côte d'Ivoire seems to be the most important institutional investor in Côte d'Ivoire and UMOA, with an excellent of 1,000 billion CFA franc, that's 1.52 billion euro. How do you assess this institutional investment potential more largely in the regions? How does CNPS is a CNPS an exception, or do you see a trend growing with your colleagues? And also, to what type of asset do you estimate that all this money would go beyond, of course, the traditional treasury bonds and treasury bonds? Thank you. I'd like to first say that for those who do not know CNPS, it is first a social security body which deals with social security of the private sector. And recently, 2 years ago, the government added everything that is independent workers and informal sector. So CNPS for the past 10 years has really started playing its role of institutional investors by becoming at the same time social security funds as well as pension fund. You just talked about has not always. We started timidly with 8 billion CFA francs, and then it grew to 100 billion in 2019. In 2022, we finished with 160 billion. 2023, we're going to end up with 180 billion, and we are betting to reach the 200 billion in 2024. And it's thanks to all this money that we've been able to structure our financial portfolio, which was 26 billion in 2012, and which is going to reach this year the 1,000 billion as a monetary financial portfolio, shared in quoted shares and non-quoted shares, and private funds and the state of Côte d'Ivoire, UMOA, and also we invest in real estate, and so we have a portfolio that's very diversified. We are shareholders, since we're talking about transformation, energy transformations. We are shareholders at Arenov, which help us to play an important role in everything that has to do with energy. We also invest directly in, it so happens that sometimes we invest directly in Arenov. For example, in Côte d'Ivoire, we are Arenov, but we have also come as shareholders, as CNPS shareholders for 15%. And we intend to play a more important role in energy, so we would be at the meeting point of the ecological transformation. For the time, we're trying to weave our net in the financial system, because the actual strength is financial strength. So once you have financial strength, you can count on, you can matter on the arena. So with finance, we have shareholders in several banks. We are investment funds, Africa Invest, Métis, and recently Africa's 50. And so we try to diversify our portfolio. As the portfolio has been growing, we have been diversifying our assets that we take. So this is what I can say for now. We are ready to monitor all the major investment projects. We are ready to associate with investment funds, banks. We are ready to invest or to associate at the regional level or in co-investments. And so we are waiting proposals. And maybe this forum is going to give appetite to the various parties so that we can know each other better. And I'm thinking notably about my friend who's sitting on my next to me, who manages an important investment fund. I think that we meet later. You have noted the call of Mr. KOUASSI for investors in the room. Mr. KOUASSI, just a quick question, subsidiary questions. Do you consider the Ivorian course exceptionals, or in your opinion, are there other funds in the UMOA region who are called to do as well as CNPS? Can you answer quickly? There are others that are interested, but they are standing condition. Basic conditions. CNPS since 2020 has been a private institution, and it is considered by state. And this quality of private management and characterized by good governance and autonomy makes it possible for us to invest to make good investments without having the influence of the state on our back. The state does not run us, and I can tell you that we are free in our investment, in our choice of taking of shares. Very interesting.
Carry on with you. So Access Pensions is in fact only a year old, and it already has ₦1 trillion of assets under management. That's less than Mr. KOUASSI's. So it's 1.16 billion euros. And it is in fact Nigeria's 4th biggest pension fund in an industry totaling altogether 19 pension funds in Nigeria, and that's for a total of $20 billion of assets under management. So you would agree there's indeed a strong funding potential in Nigeria. Can you tell us about how this potential is due to grow? Yeah, please.
Thank you. Thank you for inviting me to this session. And let me start by just introducing Access Pensions. We are 1 year old. So the 1 trillion didn't fall from the skies. Access Pension grew by acquisition. Access Pension bought 2 PFAs that had combined AUM of close to $1 trillion. And the strategy of Access Pension is to grow by acquisitions. As you rightly said, there are 19 PFAs in Nigeria. We think the field is too crowded. The top 5 players account for 60%, and that makes for a fragmented market. So one of our strategic intent is to consolidate the market. Our clear strategy over the next 5 years is to achieve a top 2 position. We intend to grow from $1 billion to $6 billion in 5 years. The problem with the dollar number is that it changes all the time. So in Nigeria, this time last year, the pension asset was worth $35 billion. Well, there was a currency adjustment which brought it down. So it doesn't do justice to the number, but it's what it is. So as you said, the pension funds in Nigeria are the dominant institutional investors in the local markets. I think the key thing is that the capacity of the domestic market has been far outstripped by the growth of pension funds. So pension funds are growing at 20% per annum. The local capital market is not achieving anything close to that. So today, if you go back about 7 years ago, the primary investors in the domestic market were offshore investors. Today, they account for less than 10% of the market. The pension funds have taken over that space and controls the markets. So we have shares in practically every listed company, the banks, the cement companies, MTN and co. But that doesn't stop there. In terms of issuances in the local market, the pension funds are now disintermediating the banks. So the big corporates like Dangote, like MTN, Airtel, all have bond issuance programs. Some issue commercial papers, but primarily 5-year bonds, which is largely taken up by the pension funds. In that sense, they are feeling quite a gap. I think the narrative most time you read that the funds are invested in government bonds. Yes, about 60% are in government bonds, but about 5 years ago it was 80%. So that's progress. We think that that number will reduce. In terms of how we see the sector progressing, it's very early days in Nigeria. The coverage is less than 5% of the population. The informal sector is not covered at all. The pension density is less than 10% of GDP. Other markets like South Africa is about 70% of GDP. So we see significant scope for growth. In terms of where the regulation is going, there has been a relaxed regulation to funding the rail sector, but we're not seeing the traction yet. Most of the monies are invested in securities listed on the stock exchange or government bonds. We've not seen a lot of traction in things like private equity, housing and infrastructure. And that is because of the fact that because of the currency devaluation in Nigeria particularly, it's very difficult to make money from private equity. When you invest in dollars, you know what happens to local currency. Infrastructure, we invested in some infrastructure funds, but they're mostly debt funds. So we see more traction on the debt side of things. Real estate also, we're invested in real estate funds. We're invested in private equity funds.
Okay.
If we had this conference a few years ago, I would have been talking about private equity, but that's not the narrative anymore. So I think that there's significant scope for the pension funds to be the catalyst to mobilize domestic capital towards deepening of the capital market. But the key problem is that the fund is growing faster than what the economy can absorb. So
Okay.
I'll stop there.
So we'll talk more about which asset class you'll be looking a bit later. Alors, Monsieur PATOKI, Madame.
Mr. Batoki, Madame NDIAYE, it is not necessarily what you've noticed, isn't it? Maybe you do not see eye-to-eye investment being made at your level due to the weak rate of banking. Mr. Batoki, today, when you talk of the cubic titles which are maintained by banks, which can create or cause problem of inflation, especially the availability of liquidity. Can you tell us about the current situation? Thank you. And I think that this panel cannot do better if we know today that in terms of deficit of investment, be it in infrastructure, energy, a gap is there. The gap is there. So what we've noticed is that let's start from some figures, and we will clearly understand the whole issue. And by then we'll know that even though there are some resources of the pension funds, we may not have them like that in the market. Let me start from first bonds emissions. What we have noticed, and I'm talking of figures of the last 3 years in average of the last 3 years, when there is an emission of bonds, about 80% of the title are subscribed by the banks. And after that, you have 9% for the PF and others for the insurance companies. When I take the three, for instance, I am at about 91%. And obviously, there's need to be careful because insurance companies and PFs, that the pension funds, have part of their resources in the banks in a form of natural funds, and the banks use those funds to subscribe. But in a nutshell, we see that clearly that it is rather the banks. It is the banks that subscribe, I'm saying it, to bonds. What really happens banks will always be refunded from the central bank, and therefore, in situations, difficult situations, the role of the central bank is to intervene and bring back the inflation to the target. Therefore, facing these situations, the bank will pay attention to the injection of liquidity, because they do believe that they will have sufficient and enough liquidity, and it's from there that the price is on a rise. Let's need to rethink the monetary policy, what we've gone through these last days, and it's not yet even ended. So there's need to rethink 8 monetary policies, and from there, the banks do not have a sufficient margin so as to come in wherever there are emissions, and that's what we are facing, and that's the contrast. Now, allow me to continue and to say that in terms of DAT, when we consider the PF, we get the different issues which might be rational if these funds comes directly into our box. We can play on the whole issue. That's a way of what you think, and I specify from the beginning that let's take the answers for at least, you should not exceed the 2 minutes, please. So this is a general remark. Madam Njai, do you really confirm that the threshold of the 8 countries that are for UMOA is 12 billions francs CFA, which get to about 90%, which is a problem really. But from our discussions, when we prepared this panel for you, the priority is to be a lesson, a teacher or a pedagogue for those who will share their experience. Obviously, Gaëlle, to talk about the 12.5 billions spoken about, we have the sovereign debt, which has to do from adjudication for public by public routes. But today, I think that Mr. PATOKI has already set up the table and maybe the difficulties that we may likely face, which also give us conviction in what we are doing today, which is to say that there's need for us to have institutional investors that will massively come to the market for the sovereign debt. That's number one. And even if at the end of the day the financial market as a whole for private investors should be developed the more. And today we are starting from those sovereign debt that are those bonds. What we've noticed is the need to build capacity with some stakeholders in the market who obviously have the capacity in terms of investment, but they do not have all the expertise which may exist with the CNPS in Côte d'Ivoire, so as to see how to diversify the whole issue. That's what we think today of the whole process. So we have a whole panoply or a number of bonds as far as yield is concerned, which may also help to meet the needs in terms of investment according to the profiles of the treasury to be determined by institutional investor. That's number one. It does not only stop with that issue, but rather the whole ecosystem, and also those who are the printers or the printers. Well, the term is to manage that economy and all the funding needs. Today, there is a need to propose a new product and clearly to those institutional investors so that they also could meet their edification of the product towards sustainable product. Well, we may come back to that later on. That's number one. And obviously, communication, which is also very important. Communication is very important, especially in the market, communication on development and the level of the secondary market. Because for these institutional investors, there's a key issue which has to do with the liquidity in the market. Let me stop there, but we'll come back to that later on because of the 2 minutes.
Pacheco, turning to you now. What's your perspective? So the institutional investors landscape is quite new, you would say, in Angola. There's been a new legislation which has been passed for pension funds to diversify their portfolios. And we're seeing a revitalization of the Angolan Securities Exchange on the back of an ambitious privatization program. Yet you're still seeing the vast majority of portfolios that are held today in term deposits. There's also a lot of real estate assets because there was a huge real estate boom a couple of years ago. You said also when we were preparing this panel that up till now, the government has been a significant investor in infrastructure and especially in energy infrastructure. Yet there are still some strong needs from the point of view of power transmission, power distribution. So yeah, tell us a bit more about all of that.
Thank you very much. I will try to be as direct as possible. So in terms of perspective, I think we all face, I was hearing my colleagues mentioning the reality of their markets. I think we all face the same issue. The first issue is that, pension funds and asset managers in general, they invest, they have a sizable allocation to government bonds. In our market, it represents around 52% of the assets under management. We also have the issue that pension funds and asset managers keep a lot of their portfolio in cash. So we have 40% of the portfolio of pension funds in Angola is in cash. And so these two issues creates the lack of mobilization of capital. So this capital should be invested to productive projects and is not being invested to these productive projects. So you mentioned clearly, and having said that, you mentioned clearly that we have needs for infrastructure. So 80% of our electricity is produced by renewable energy.
Yeah.
But we only consume 60% of the electricity that we produce. Why we don't have transmission lines and distribution lines? And the reason why we don't have this is because the government is doing all the investments, and of course, it cannot do everything at the same time. So we need to make the power sector bankable. Making it bankable, we need to change the tariffs and all of this. And this is precisely the challenge that we are facing now in the country. So my perspective in terms of how to mobilize capital, I believe that in my country and perhaps in many countries in Africa, there is a lot of capital that should be mobilized, is sitting idle. And of course, we have needs for this capital, but perhaps some of the industries that this capital could be allocated in mass are not bankable yet. So there is a space for policy to be implemented.
Okay. It should be noted that in Angola, the price of power is especially cheap. Huh? I think you said 1 cent per kilowatt hour or something
1
like
cent
that.
for kilowatt hour.
Okay,
I think it's 99% less than pretty much everywhere.
Yeah, so hence the need to review those tariffs.
That is an issue for us, but should also be an opportunity for investors because power in Angola is quite cheap compared to many countries.
Okay. So, Mrs. LOUAT, we're running about 10 minutes late on our schedule. Can you tell us about IFC's perspective? The state of play in debt capital markets is pretty gloomy, you would say. Bond investors have made the biggest loss, 20%. Nevertheless, there's hope. There are some notable projects in Africa. Can you tell us about there was a green bond in Egypt, securitization of Ivory Coast electricity receivables? Can you give us hope?
Yes, I want to comment about IFC's work in capital markets.
Yeah.
And we don't only look at current market conditions. We actually have a vision for the development of capital markets across emerging markets and on this continent in particular. So we see, that there are deteriorating market conditions, but we look at supporting the debt capital markets by supporting issuers and attracting investors. And we do it in very crucial areas of development where we believe that we can have the maximum impact. That would be, as you mentioned, on green bonds. So we have participated in issuances on the continent in 2017 with a green bond in Morocco for BCP. We do a lot of our work with the financial institutions. There is also the first green bond in Egypt with CIB, and we are working in Tanzania with NMB and CRDB. So we have a broad presence in supporting green issuances on the continent. We also have another area of priority, which is gender. So we focus on gender bonds, which are a little niche type of transactions, but which we believe should be a priority for many investors. And finally, we also have worked on securitizations in Africa, in Ivory Coast in particular. So you can certainly look at the bad news, but we like to see the potential for improvement. So we like to look at the fact that if international investors, are asking for higher spreads because they consider the emerging markets higher risks, we believe that there is potential for local investors to become more involved as they understand the local market conditions better, and they can therefore be more proactive in investing in these local issuances. So from our perspective, there is really a potential for growth, and what we want to do is facilitate these interactions between the potential issuers and the vast potential for local investments.
Okay, so opportunity for local institutional investors in this time of crisis. Now I'd like to turn to our second key point, which is how we can better allocate risk management and regulations to better attract those institutional investors in African economies. Mr. UDUANU, I'm going to turn to you first. We've agreed there was a huge financing potential on the part of pension funds in Nigeria, but the challenge, in fact, is finding those investment opportunities. Nigerian regulation prevents pension funds to invest in regional instruments, so the African Exchanges Linked project, as of today, is of limited use to you. You're not allowed either any direct investments in energy, in infrastructure. You can only invest up to 10% abroad. So tell us, please, today, which are the asset class you think is going to benefit from this extra money you mentioned earlier. Yeah, please.
Okay, thank you. So just the point on the 10% allocation. So it's a risk management allocation in a way. It's building a hedge, against currency devaluation. But unfortunately, African currencies, are not convertible, and two, they tend to be, the big markets tend to be positively correlated. So when we had devaluations in Ghana, in Nigeria, we had it in Ghana, in Egypt, and Kenya. So you can't really protect the funds by putting money in those markets. And, if you also look at Euro bonds, once the Ghanaian default happened, everybody bailed out of African Euro bonds. So in a way, the extra money is going offshore, unfortunately, will not be allocated to projects in Africa, but will go to risk-free instruments abroad. In terms of, so what we're looking at is really to start with very safe things as usual, maybe government bonds, ETFs, and co. In a risk diversified manner. But in terms of between where we see the biggest traction, I think credit rather than private equity, because, so we're seeing huge scope for credit, whether it's infrastructure credit, real estate credit, corporate credit, growing significantly. You only need to, MTN raised equivalent of, $1 billion. You just need to call pension funds into a room and it's taken up. So we're seeing scope for that. Regional projects, I don't know how that's going to happen yet. It's not that the regional projects are forbidden. We can invest part of the 10% outside Nigeria, but we are looking for a hedge. And that hedge, unfortunately, do not exist within these African countries. But we see scope for working with DFIs if they're able to provide instruments, as usual. But our DFI friends also like to hedge, so everybody is trying to protect their monies, which makes sense because after all, it's pension monies. I don't know. The problem is time. I don't know how detailed I can go.
We're doing better. I think we're about only 6 minutes late now. But do you want to elaborate?
So the point I wanted to make is, in terms of direct projects, what we're looking at now is the regulation also allows us to do co-investments. Okay. But that's also a new regulation. But unfortunately, the co-investment are linked to private equity. So what we're trying to do is to ensure that that co-investment is taken out of private equity, and we can do co-investment directly in real estate and infrastructure. So we're looking for partners who will bring some, some sort of capital. We have a company called InfraCredit sometimes that helps us finance some power plants in Nigeria. We've done green bonds as well. But the key thing is that we need partners that can bring in the first loss capital so that we can then invest alongside them directly in infrastructure. We are more particular in infrastructure, power assets, toll roads, airports, and in real estate.
Okay, so there's another hint to maybe private equity operators that are maybe in this room right now. Okay, turning to you, Mr. Da Cruz Pacheco, can you tell us about Angola's regulations challenges? Foreign investors can come and buy securities on the BODIVA, but it's a different story for local investors. There's actually a restriction.
Yes. Unfortunately, there is a restriction. So our friends in Nigeria, they can invest 10% of their portfolio. In Angola, fortunately, Angolans cannot invest abroad. And I think there is an opportunity there for us to invest abroad. Specifically, if we want to promote regional trading and regional transactions, we should also allow us, especially to invest in neighboring countries like Congo and Namibia, because there is a lot of infrastructure that we can invest in both countries. And this infrastructure will facilitate a lot of trading among these countries. I think it will be beneficial for everyone. So the biggest limitation that we have now is actually the FX regulation that we have in the country. And of course, as soon as we see value on allowing a portion of our portfolios to be invested abroad, I think it's something that we can look at.
You'll be jumping on it, okay. Monsieur KOUASSI, est-ce que la CNPS rencontre...
Mr. KOUASSI, does CNPS regulatory barriers? Can you tell us more about the management of risk in your investment portfolio within the funds? I would say that CNPS, because of its status and because of the importance that the government gives its role, institutional role, we have a lot of freedom that others do not seem to have. And to come back to what Mr. PATOKI said, our portfolio at 43% is made of direct loans that we got from UMOA. Today, in terms of term deposit, we only have 17% of the portfolio which is in term deposit. And this 17% for us, it is while waiting for investment opportunities. So for us, we try to be truly investors, and I was saying that 43% in what was the ratio 5 years ago? It was weaker. It was lower. Our reform was in 2012, and in 2012 these loans were insignificant. It was not even 10%. But absolutely, the amount was in 2012 it was 3.3 billion. Today it is beyond 300 billion. So multiplied by 100 within 10 years. So you can see that within 10 years we really played our role as investors, and I think that the BRVM of the Monetary Union feels this very good. So we have 30% of our portfolio in shares, quoted on as well as non-quoted shares. We have roughly 3% in investment funds. So it's a portfolio that is very dynamic, very diversified. In terms of regulations, restrictive regulations, I believe that we have to take advantage of the investment funds. Even if you don't want to intervene directly in FX, through the investment funds such as Africa 50 or Ametis, you can place your money and they invest pretty much everywhere. So that is always a possibility that you should take advantage of. So we don't have any constraint even regarding the sector of activity. We cover all the activity sectors, and at the international level, let me give the example of Iranov, which is not an Ivorian company. We have 15% of this multinational, which invest everywhere, pretty much in foreign countries, in water and electricity. So in conclusion, to close, I would like to say that I have the feeling that the system in our sub-region at the African level is all partitioned. So we not talk to each other sufficiently. So there are nooses that we have to undo. Because if we're all to pull together investment funds, the pension funds, and regulation structures, if we're all to pull together in the face of business people, the banks, really, I think that we need to create this dynamic, this synergy, which would enable us things to be more fluid. But everybody protects themselves, either par rapport the countries or par rapport the exchange risks, and that way it will be difficult to move forward. Well, we'll talk about this later. We have a portfolio, I note a portfolio that is 43%, that is less than 50%, and this is to be noted. Mr. PATOKI, tell us about the access of possible improvement access. So there's a foreign regulation of exchange that whereby the national savings cannot be used outside. The flow outside is limited. So what is your viewpoint on that? Well, these are details. Let me come to the state of the union, the Monetary and Economic Union of West Africa, who have adopted the regulations on the foreign financial relationships. And in this regulation, in terms of investment, whether it is in asset or real estate, you can only use 25% of national savings to be able to invest outside. So if you have to invest outside, you need to find outside the remaining 75%. You have to find outside the remaining 75%. That's what the regulation says. Why? Because we want the national savings to help finance the internal local investments. So when you take the code, the Sigma code, there is like a breakdown between the titles, and then the Sigma code tells you minimum 15%, maximum 50%. So I point here that Mr. KOUASSI here, that there have been a step taken, but I must say that there's still a little to be done to really reach this ceiling. Now, in terms of investment on shares, it is between 10 and 40%, and today what we can observe is that on the average, I'm not talking about Mr. KOUASSI's company. On the average, it's in our union, it's roughly 70%, and on obligation, it's 29% on average. All structures put together, so you can understand that there are margins. And then when you look at liquidity in terms of classifying them, it's between 10 and 40% today. On the average today, we are at 34%. So we are practically getting to the end, which makes us think that very naturally that these structures have they are leaning against liquidity, which maybe has to do with a constraint somewhere that we do not address enough. It could be problems for liquidity on the market, because to detain a lot of titles and not be able to go outside easily from these titles can bring them to place a good part of this in liquidity. These are things that we have to look at, and that we should be able to modify at a given point. Mr. Dias, Madame Dias, do you want to make any comment on this?
C'était le propos de Monsieur PATOKI.
Still going in the same vein with what Mr. PATOKI has said, and considering why Amazon it is important for the liquidity of the two instruments that have been that the bond is another problem. Because today, as we have it in CPS, we have more than about 40%, which is a kind of a share, and you have two categories of assets there, and the liquidity is there. And once we have a need at the treasury, there's a need to grab from there. And this is very an issue important today in the market on which we are focusing, and so as to improve the liquidity in the market. And what will be convinced about will help us to revitalize the activity that has to do with all assets, and also be able to improve collection so as to fund afresh the member states. Maybe talking about the foreign investment. So today there's no restrictions or special problem about that, and it's true that we have in mind to develop the regional market funding from local savings, but we are working with integrated economies, and it's important in Africa for us to transit that fund. In UMOA zones, there's no specific problem about that. When the money comes, the only thing we have will be with the foreign investors, and when they want to get their currency back after investment. And they also allow me to insist on the fact that there is a regulatory framework which do exist on how to we want to invest as a foreign investor, especially within the zone. How do we proceed? How do we bring in funds within the zones? Then, once the currency gets to the central bank and they are declared, so the repatriation of the money is easily done. Still, have in mind the communication and sensitization from local or foreign investors based on regulations. Just to mention a few. Mrs. Roth?
Markets. Where does Africa stand? What are the challenges today for the continent?
Yes, thank you. We work across the continent, not in any specific zone. And if you look at the continent in general, many countries lack the economic, the policy, and the institutional fundamentals, and also the market size. There is also often not a yield curve because of the underdeveloped government markets. So what we see is regional integration really shows promises, but it still needs to be further developed across the continent. And because of the dependence of local institutional investors in government securities, we see that there is a need to introduce more private sector issuers and more risk appetite and even risk understanding of what these issuers are presenting, so that there is more analysis of the risk-reward equation. So there is also in some countries a need to develop the market infrastructure, and some needs in the banking regulation changes. So for us to develop capital markets, you have prerequisites, right? That we need these conditions in place for successful, impactful engagement in capital markets. And a more holistic view of these conditions, including the macroeconomic situation, the state of the government bond markets, the composition of the corporate sector, the presence of the international investors, and the framework for securities market are really important to get a significant boost to capital markets locally.
Okay, thank you. Okay, so we've only got about less than 25 minutes left. Okay, let's move to the third key point now. What are the innovative mechanisms that we can put forward to entice local institutional investors going into capital markets in Africa? Monsieur PATOKI, Madame NDIAYE, à ce stade, je comprends qu'un guide a été élaboré.
To this end, I think that the guide has been developed by with the support of the World Bank at the YM level, and we've already spoken about that. We also have the fact that there are some countries working in isolation. Côte d'Ivoire has already developed a framework. Now, from your own point of view, is the request needed? Madame Ndiaye, you may want to come in. You may want to start. Mr. PATOKI. Okay, Mr. PATOKI first. Yes, when we consider the current situation, what we say is that there's a need to have a framework which helps to have other products. The other product that will help other investors to come in, because we've seen the limitation of our local investors. What we've done, maybe 1 or 2 years already, we put in place a regulatory framework on Islamic funding, because we know that there are Arabic funds that come in, and they may want to come in that kind of instrument, and there's need to put a framework, which we've already done. And today we have a great funding. The framework is already there. It exists in a sluggish way, manner, but last September we held a colloque so as to show investors the possibility of sending tools that will capture the green funding. Well, I may not have the time to talk about everything, but the liquidity on secondary market, we are thinking and knowing that if we can have any loan which can also help so as to know what we should do. And if we do that, we establish a framework with more tools, and by then every investor will find in what is convenient for him so as to complete efforts being made at national level. Madam NDIAYE, you may come in now. Well, it's true that today the framework does exist because capacity building and awareness raising will be the trigger that will call investors of products. Because for the time being, and in terms of demand, we are not yet fully convinced. If we talk of demand from local investors in our zones, that we should have that appetite. And maybe it's from there that the senders should work on different tools, on blended finance and others, so as to bring in some investors, that especially institutional investors, for classic investment, and also for us to be able to find investors that will be interested and attracted by those green product, which is much more structured. But today, there's need to go through those channels, invest to investors, as well as the senders, the interest of that product. Madam LOUAT spoke about infrastructure in our markets. This should be a prerequisite so as to continue in this project. And once a sender will work on sustainable funding or green funding, we can think we'll be able to determine what we should do in line with the classical issues, especially on this benchmark. And we should say that we are not yet stable on what we are doing for the time being. The ranking, the issue is, to my own understanding, once we will have the first element to put in place, we will have institutions within the zone that are known by the regulator and for local currencies. And today, these are tools that will help us to note most of the investors are noted, ranked, and that will be the opportunity to get to specific ranking within the zone so as to know their capability.
Could you tell us about the environment in Nigeria? Right now, you're not able to do a syndication with other pension funds. You need specific funds to be created, special vehicles, so that you can invest in them, debt instruments with proper guarantees. Tell us more about your specific needs and what can be improved.
Okay, thank you. So just in closing, what I would say is that it's about time. So the pension regulation in Nigeria has been characterized by extreme risk aversion. So the catchword is don't lose money, okay? After 20 years, I think, I'm not saying lose money, but you can't keep saying don't lose money. So what you find is that there are too many tiny pension funds. And when you have tiny pension funds, they are not able to build strong investment teams. So the first thing is industry needs to go towards consolidation. This has played out in the banking sector in Nigeria. Today, Nigerian banks are all over the continent. The same thing will happen with the pension funds. That's the first point. Second point is that we think with the rise of big pension funds with at least 1 trillion, of assets under management. There are about 5 of them now, assets under management. You could begin to now build investment portfolios that are well diversified. And I have 3 clear ideas. Number 1, I mentioned, is a co-investment vehicle. But I even think we can sponsor our own co-investment vehicle, which is proprietary and which should be staffed and begin to look for investment, working with investment banks. So there are people that bring projects to the market, they are de-risked significantly, not completely, and you can put investment capital. The second point is a loan market. So one of the things that we find in the banks in Nigeria is a lot of them create SME loans and they put them on balance sheet, they are not able to create new ones. The pension funds can buy these loans by creating syndicates, pension fund sponsored investment syndicates to buy up these loans so that the bank's capital can be freed up to make new loans, especially in SMEs and the finance the green economy. And the final point, I think for the regional integration, I suspect one of the ways could be to use a listed company in Nigeria, because we're only allowed to invest in either funds or listed companies, but it has an African focus in terms of investment, but listed in Nigeria with a clear mandate to then go after these investments. Working with other pension funds, like in Angola, we could form some partnership. We speak English anyway, so that's a good thing. And my friend here, we can also work together. So I think these things are possible, but we need to bring regulators to the table, because at the end of the day, they have to make these. But these are the clear policy changes, and I think direction the market should take. Thank you.
Okay, so lots of perspectives there. Monsieur KOUASSI, au niveau de la CIPRES, la conférence...
Mr. KOUASSI, at the level of CIPRES, the Inter-African Conference on Social Prevention, there's a project of creation of investment fund, FIA, to which Cameroon, Côte d'Ivoire, and Participe already are participating. And the matter is about this bringing in the African Development Bank, the African Guarantee Fund. And so can you tell us on this first initiative, can you tell us more about it, and to what extent is this absolutely necessary, if not even fundamental? The idea started from the fact that the social security funds have important reserves, and that if we were to put all that together, it could constitute an important financing in the state, but also between state, notably on infrastructure that we're talking about. Just that along the way, the authorities in some countries have felt that, have deemed that these are funds that would escape them, so they started being reluctant to do that. And it is Côte d'Ivoire and Cameroon who took the step. So the project was done with all of the CIPRES, but those who have taken the steps and crossed the line to be shareholders, it's the fund from Cameroon and the fund from Côte d'Ivoire. And as luck would have it, it is those two bodies that have, who are fully in investment and who have important portfolios. Let me recall that Cameroon, even at the time, was in a situation of the suspension in terms of investment, and it is in 2015 that my colleague asked me to come and do an intervention before his board to see a bit what we're doing, because they wanted to do it, but there was the board was not supporting them. So I went there in 2015. We had the meetings, and the board told him that from then on they were going to let them, and they just exploded. So before that, when they invested 10 billion per year, they felt that was important, that they shouldn't take risk if you are in the term deposit. So, but after our experience, it went very fast, and today I think that the fund from Cameroon that have a portfolio of 1,500 billion, and I think they have taken shares in Afrixing Bank and many other companies. So this is why I'm saying that we have to talk with one another. There are too many partitions. So what Cameroon did, and that also recently Niger started doing, it's possible. I went twice to Burkina to communicate, to do, because in Burkina it's 65% of the funds that are in term deposits. So you see, this is what we're talking about, or the hindrances. So the will is there, but in meantime, there was what happened. In the meantime, happened what you know, but we have to know. This is not necessarily a hindrance. A small record within 24 hours in the coup in Gabon, the new person in charge changed the funds. Even for it is in 2014. It's in Gabon that I went the first. I met ministers, I met the employers, I met the workers' trade union. They're all for it, but no reform was introduced after that. Let me recall that one of the pension funds in Gabon is currently being under provisional administrations. So you can see there have been different courses of the other funds from Cameroon and Cote d'Ivoire. Now we still have 9 minutes. Mr. Cruz.
Securitization assets coming on stream in Angola on the back of failed agriculture investment programs that are being repackaged. Can you tell us more? What are these new mechanisms, and are you getting interest from investors?
Yeah, it is an interesting subject that is happening now. So we had waves of I would say, policies to increase the investment in the agricultural sector. And some of these, within this policy, the credit enhancement mechanism by the government was one of the pillars, or one of the measures. And of course, there, as is any credit operation, there was some defaults, and some of these defaults were related to projects that were implemented, but some of them had governance issues. Some of them, though, they were not aligned with the market, and so there was, for several reasons, this project didn't go through. So right now we are looking at finding a way to repackage this, sell it to the market, and find new promoters to this project. So the whole idea is to securitize, repackage, and resell it. With this, we'll enable two key objectives. The first objective is to, of course, the assets are there not being used, so put those assets to produce for the people there. And the second is to find a way to mobilize all this idle capital that we have in Angola, and I believe is the same issue that is in many countries. So this is one possibly innovative way for, given our infant state, or given the state of our market now, to be innovative and allow capital mobilization and increase the GDP.
And the BODIVA is also being innovative on the front of green bonds, I hear.
Yes, there is a green bond framework developed by the government. So we are trying to find a way to promote these products. There are a lot of initiatives. Some of them, they are still, I would say, confidential information, but they tick all the criteria to become green bonds.
Okay.
And of course, and some of them are related to exports, which will attract foreign investment as well. The foreign investment is part of the structure. But we also we look at the Cape Verdean experience, and what they did, they simplified the process. So they simplified the process, and we are trying to find a way to simplify the process as well, to make it make it possible for us to issue more green bonds, not only in terms of developing new products, or in terms of only sustainability, but also for us to develop products that will actually solve some of the problems that we have in the country. And I can mention many. I will only mention one. Yeah. Every day we actually burn the country to produce charcoal, because people don't have energy. They produce energy from charcoal.
Okay.
If I can find an innovative way to finance these people, I will save these fires.
There's another call to investors in this room. Mrs. LOUAT, you'll be closing this panel. What are IFC's recommendations in terms of new mechanisms? I think there's a good country-level example you want to talk about, which is Colombia. And I hear also that today There's been a partnership agreement that has been signed with the Ethiopia Capital Authority. Do you want to conclude on those initiatives?
Yeah, I just want to conclude on the fact that the needs of the continent are huge. You know, if you think of housing, infrastructure, the energy transition, and capital markets is the best way to address some of these challenges. So this is a good time to work on improving the institutional setting and to focus on the investment environment, to entice investors to look at those sectors. So in addition to like diversifying the offer of products, I think the regional approach to bond market development is very important. The public and corporate bonds are dominated by limited and a very undiversified debt securities. So there is scope to broaden green bonds, as you mentioned, ESG bonds in general, because 8 out of 10 countries most affected by climate change globally are in sub-Saharan Africa. So it is a good time to develop the local bond markets, to help grow and finance SMEs, and to introduce new asset classes and product. So it's important that we consider also the capacity building of local investors so that they understand how to assess the risk profile of these issuances. And that could mean also developing the capacity of supervisory agencies, promote credit information, credit ratings, and the regulation and the supervision of these agencies. So there's a big agenda to develop capital markets in Africa. And we have indeed seen examples. Colombia comes as an example where the needs of infrastructure were so important that they became the lead demander of development of capital markets, because there was no other way to find long-term financing but to develop this connection between the investor base locally, the pension funds and insurance companies, and the needs to see the infrastructure grow and in this continent, I think that's what we are seeing as well.
Okay, and you saw that in Colombia, it worked. There was this...
It worked. There's a very long history of step by step, you know, brick by brick, building the capital markets. It takes a lot of investment, like personal investment of all parties involved, and collaboration, as several of my colleagues have mentioned on this panel.
Okay. Okay, thank you very much. So we've got 3 minutes left. I can either conclude or open the floor for questions. I'm going to open the floor for questions. Are there any questions you want to ask our distinguished panelists? Yes, the gentleman in front. Can we pass him a mic? Can you present yourself?
Good afternoon. Mohamed Ouad, Amandla Capital Real Estate. We are a real estate asset management company en français. Nous sommes une société de gestion d'actifs.
They're based in Côte d'Ivoire with operations in Senegal, Cameroon, and Niger. The question would go with a certain their portfolios, especially for the entities that need issues to be put in place for energy, where they talk of charge from investors. And the question I have for the institutional, those involved in institutions, and want to know what they should do as far as creating new capacity to produce energy or power, but the stock that is needed at the institutional level, which will be the first source of transition, that can also help a lot once they could go for a green emission. Who may want to come in?
Voici.
Bon, je pense que
I think that even before talking about the problem of stocks or storage, there's a need to make sure that the future institutions should comply with the standards. Otherwise, it will be as if we are reinventing the wheel, that is taking it again. Once we are sure that you've taken sufficient measures for the future, we now think of what to do so as to take into account the previous stocks. This, for me, is better to devote more means to what should be built, to be constructed, and now shared on a long-term basis what should be done. That's my point of view. Any other person that wants to ask a question?
That was a fascinating discussion. Thank you very much. My conclusion, aside from all the improvements that are needed, is really first and foremost communication. I think you guys should meet more often all together. Vous devriez davantage vous rencontrer ensemble pour
meet together so as to define your needs and to understand the needs we have in face. That's what I have in mind. That's my takeaway. A big round of applause for the panelists.